Hi, good afternoon, everyone. This is Nadeem here from the Stock Advisor 1986. Loads of the people have messaged me from last 2 days that we would require your voice note on how to do it in the next week and the coming weeks. The last week you have been saying it to us not to buy, not to buy. What's the plan B? What's there in the next week? So let's go through it day by day. Like we have a couple of companies. Nifty having their Q4 results, and there are some of the very well-known companies who would be declaring their results in the Q4. Irrespective of the results, I don't feel much positive. The market would be. The market would be still in the bearish zone, and there are several of the points which I wanted to highlight to you, and people wanted to know also that why I am so bearish onto the economy at this point of time in the market. So first and the foremost thing is India is getting into the worst crisis. All right, on the upper shell it looks like green, but inside the Indian economy is facing big heat at this point of time. The inflation has been rising on and on, all right, quarter by quarter, month on month. If you see it out, the inflation numbers have been very shocking at this point of time. RBI is doing as much as it possible for them to do, but there are it cannot be fixed in the next day, and things will get worse in the coming days. FIIs have been straight selling for the 8th month. This would be starting the 9th month, where they will be continuous selling it out, and the outflow money is going at a huge pace. There's no stoppage at this point of time. So this is one of the most major threat to India, because this is a thing which can stop the market outflow and make it into the green zone, but this is continually being on the selling side. Retail investors, people tell us that the retail investors are investing, but that doesn't matter to me at this point of time. Retails are not that can hold the ship, which is Indian market. All right, for that we need the foreign institutional investors. Domestic institutional investors are getting money from the retail who are not able to do the regular trading. They do it from the mutual funds, and from there they are getting an increase of the amount, and that's why they are investing. I personally feel it's a very bad state of the economy at this point of time. There are several states in India which are very similar to what Sri Lanka is at this point of time. Overall economy is still at the floating zone, but there are many states in India that has gone to the sinking level. So that is a state to worry. The COVID numbers are again increasing. That's the second thing. The oil prices have not been back as there has been loads of factors, global factors, which are determining the oil prices. And at this point of time, the oil barrels doesn't seem to be coming down of the 100 levels, and that would hit a lot to the Indian budget. And it would also widen the trade deficit of India. So LIC has not been a majorly a good point for India, where they were thinking that they will get the money, and they will do the all the interest payments and all that stuff, but it's not going through at this point of time. It's such a good state. So all these factors and the global looking at the global scenarios, the inflation in 90% of the countries have shot up very heavily because of the oil and the other prices. Wheat has been the concern for most of the global markets, and Russia and Ukraine were the one of the best, one of the highest producing wheat countries. But then as their supplies have been impacted, the countries all over the world have also been impacted by it. The oil prices have been surging, and the global countries are facing the heat because of it. So this is actually not the market what we want to invest for a longer perspective. All right, regular trading you can do it with stop losses. All right, avoid those days where you see the red zones, and start targeting when there is you see a green shoot coming up, and target that day for 2-3 days, and once it starts turning again red, you need to sell and come out of these stocks. This is how you will be able to manage the market. Do not try to hold those stocks for a longer term. because the market is in such a bear grip at this point of time that I could see very lower levels also downside if something is not working at this point of time. The economy needs to be in a good position, but seeing the crisis in Sri Lanka, Pakistan, Nepal, all the other developing countries, what we have been seeing on the news and everywhere, India is also not in a great state. It has just been shown as a green area, but I do not think so. That's the inside story, what is all about. So anytime we might hit a roadblock and we might sink very badly. So one, keep your portfolios very lighter. If you have stocks which are of your father's time, or somebody has invested from your families and they have kept it, all right, if you wish to keep it with a stop loss, because that can ruin your portfolio very badly. Or the other thing is sell off, take off all the cost cash at the sides, invest 25-30%, do the regular trading, which is your swing trading, earn from that, and again reinvest. Do not try to put the whole capital inside the market at this point of time. This is not the bottom. I repeat, this is not the bottom. Bottom is too far away from us, all right. Seeing the global panic, seeing the Indian economy, seeing the inflation levels of India, seeing the rupee depreciation day by day, what is going right now to 78 rupees, it's a concern for the Indian economy. All right, we need some major things to work it on to bring the economy onto the back onto the levels, but it sees a lesser chance at this point of time, because the global condition is also worst. Most of the countries are facing the heat at this point of time, so the brakes have to be fully applied at this juncture, and you just need to wait, hold on, invest day by day, and take it off as you see smaller profits. 5 to 7 profits done in a particular stock, it is good, and then you can just hold it with a stop loss of 2%. If you see a red market next day, just take it off. That's how we have to do it, because there is nothing called long term in this market. It will crash badly, and then you will not be able to stand up for your rest of the years to come. And then you will also be giving an example, okay, once I had an opportunity, I couldn't sell it off, and now my portfolio is bleeding like hell. So this is I'm trying to say every now and then, this is not the market. You can play to this market, there's no doubt about it, because you never know when the bottom, when the green, when the red will happen. But you need to be very watchful, you need to be very cautious in this market. It's a deep market, is very deep, all right. It can take you towards the bottomest level, and you will not be able to face that shock. You people are the retail investors who have just started in the last 2-3 years. The majority of the people are those who have never taken the market towards seen from that level or from that angle, how far or how deep it can go through, and it can make you bleed for years and years to come. So I would request, please, if you are doing the regular tradings, do it from wherever you are doing it. My subscribers, my paid subscribers, as I am giving it to you, I will be giving it to you, the stocks. Maintain stop losses, all right. Do not greed at this point of time. Just take it off from the table, whatever you feel like. A 5%, a 7%, a 4%, a 6% is better at this point of time, instead of sitting idle. Make your portfolios very light, all right. Sell it off, anything what you have it from the earlier things, or maintain the stop losses. Clear your tables, clear the cash out. You will soon get an opportunity when the bottom is hit, but we'll have to wait for that. It is not very easy market at this point of time, and it's not very easy to earn in 2022, and it might also hit the earlier part of 2023. Alright, so that's what I wanted to share with you people. LIC, again, people asking me about the LIC. My term is like that. I have dual mind at this point of time. LIC, the rate which has been listed is not very good at this stage, bringing the LIC when the global markets and when the Indian markets were not performing well. But then they needed the money to pay off the debt, the interest payments, and that's why they had to come early into the market. The second concern for me is FIS have not invested into LIC. Again, the question comes in whether they will be jumping in after the listing, or they will be still staying away from it. That's a question. So we'll have to see the opening day. I'll be keeping some cash. If I see a green shoot coming in, if I see some reversals, it may drop. It may not come back to that level. It may drop. It may just take it up if the buying comes up from the lower levels. So we'll have to be very watchful on that day. It can be a Paytm, it can be a DMart, as I've given you an example. All right, it can shoot out to 60-70%. It can also tumble down till 30%. So it is a wait and watch situations. There is no technical analysis that we can do at this point of time. On that day of opening, if somebody comes up with a buying, we'll see it. It will hit the bottom and it will start running into the green. But if we see somebody selling out, the majority of the people, of the retail investors, it might sink also. So you have to be watchful. But I somewhere also feel that the government will not be able to, at this point of time, take it downward level. They need to show it to the FIIs that the LIC is a hit, LIC is a performing company, LIC is good to invest, and then they want the FIIs to come and grab the shares of LIC. So there is the second stage where I feel there would be a very sooner, if it hits the bottom or if it comes down on the opening day, they will try to grab it up. The government or DIIs or the HNIs, high net worth individuals, will start to grab it up and tighten it up so that the falling market doesn't kill the LIC limelight. So we'll have to be very watchful. I also want the shares of the LIC for a longer term perspective, but I have to see it out. It should not be a next Paytm. But at this global stage where the economies are tumbling down, where there are high countries which are in a very bad state, there has been a recent report from the on the Google, also from the Bloomberg and other international websites, news channels, that there has been a huge countries, which is Egypt, Tunisia, South Africa, Indonesia, from so many of the majority of the countries which we hear the names are in a bad state. Their GDP is the worst performing at this point of time. Inflation has hit the highest level. The food inflation has gone to the highest mounting levels. The debt is in a bad state. Everybody is going towards the IMF for the money matters. So it's a very, very difficult stage, to invest in this market. There is no long term. Please do not go through the news channels and then, try to quote it up that they are saying is a bottom aa gaya hai. There's no bottom at this point of time. Time will say it. Neither I'm, such an expert that I can say to you tomorrow it is a bottom. Neither any of the news channels will have that information, because it depends when the global economy comes into a good state, when the Indian economy comes in a better state, the FII is coming into the market, the HNI is coming and buying it out. That would be a stage where we will say, yes, we are improving in the macro levels and then the micro levels. So it's a huge task at this point of time, which I see it as a challenging game. So just hold on, invest daily, take 4-5% of the returns and just come out of the market. This is the best advice what I am giving it to you, my free subscribers and the paid subscribers. I am very blunt in these things. I do not want to just say to you good things and then get you trapped, and then for the longer term you will not be able to invest with us. Thank you so much. This is Nadeem here once again with you from the Stock Advisor 1986. Thank you.